loaded, most certainly. Yeah, I get it loaded. Just ride the play. If you ride the play, Johnny ride the.
All right, so in this video, we're going to talk about scalping, how you can actually scalp with liquidity, liquidation pull, liquidation grab, and scalping off the 1 minute time frame. We're going to be using different time frames, however, to make sure that we have these really aggressive, essentially sniper entries in the market. So that being said, I do have a roadmap PDF file that I will be giving away for free. This is actually everything that I will be talking about in this video, which will just be more broken down into details as far as just like words and kind of more examples as well. So if I can get this to 500 likes, I will be sharing this for free. You guys will have access to all of this. It is a 7-page PDF, ebook PDF. Now, one other thing too, if you guys do not have a broker, I do recommend signing up with Offspring FX. You guys will see it pop up. The reason I'm saying that is because they do have a funded account actually integrated with the broker. So I do have a discount. If you guys are willing to sign up with them, you are able to use the Solo 20, which you'll get 20% off when you decide to sign up with them. And obviously, using everything I talk about on my YouTube channel, man, you guys can make a killing and a fortune off of that. So first and foremost, what is liquidity? Considering that you may not know, I'm gonna just kind of give you a short-term version of liquidity, but it will make sense. So what liquidity is essentially a amount of traders that is trading a certain amount of volume and trading. So what I really mean by that is, let's say you have these essentially higher highs, higher lows, or change of character. Well, I look at those areas as essentially a liquidity area or liquidity pool, because what end up happening is market has to come to a level and fulfill that at some point, which we will call a liquidation grab or liquidity grab or buy stop or sell stop. So what I am going to do is basically show you guys where we can find these at, because if you also think about it, it's really a settlement in the market. So you notice how market settles at one spot and then it settles at another spot. So here you see a settlement, here you see a settlement, and here you see a settlement, and also even here you see a settlement. These areas are what I essentially like to also call liquidation pool or liquidation pools, liquidation area zones, just because these could be potential areas where smart money, big banks, institutionals, algorithmic plays can come and grab that liquidation and get all of the retail traders, essentially what we call it, out the market, so they can make more money to move the market in that same direction, or let's say rally the opposite way. All right, so here we already say we have our higher high. Now, after we establish that higher high, how do I know it's a higher high? Simple, because we look left, you guys see how we had liquidation grab here, which created a buy stop, and then market went down, but it never closed with this area as well, right? However, we did reach this area, which also we got a liquidation grab going on here and even here, and the market hit up. Now, after that had established, we see that we have our higher high created and our higher low created and our higher high created. So now what we can essentially do is mark these areas out, and then as well as this area over here will also be our higher high. Now, what we are going to also do is just extend it out. Instead of me calling it a higher high, I am just going to change that to liquidity. So now that we have these two areas going on, now I essentially see what's happening in the market. So my whole thought process is, well, I want to know where can I look for entries. So entry points, when you guys see the PDF, I have 3 entry points in there. One of the entry points that I do look for is liquidity pools, previous lows and highs. Also do look for the ITC for a lot of people that is familiar with the fair value gap. I use that as well as another target point for entries and exit points. And also we're going to throw in imbalance as well. And the final one, I look for other points of interest in the market, which would be like supply demand, also imbalance, essentially just mitigation, stuff like that. That's pretty much my 3 targets that I look for. What my thought process is first, I want to see market head back in this liquidation pool to grab all of the, let's say, buyers, or really essentially, let's say we're looking for the buyers, right? Because we know market broke to the upside. So obviously we know all the retail traders will be looking for buying opportunity. Maybe you might have got in, got out somewhere here, but everybody else is still looking for that whole ride up. Well, what's going to happen is smart money come in and they grab all of that buying power out, which will close all of those sellers out. And then now they will create more money for the big banks to move the market a little bit more aggressively and then move the market again aggressively. So I'm cautious of that, right? But I am aware of trying to find out where I can spot that so I can use that to my advantage. Now, before we just get in the trade, I don't just get in the trade blindly. So we can't be blinded about getting in an entry and then not having a full roadmap, right? Full roadmap is we need to know our TP area and our stop loss area. So now, like I said, I look for one of these threes as far as target points. So I'm on a 1 hour time frame, and me being on a 1 hour time frame is a nice little chart for me, or a time frame for me to look for in between 15-minute and I would say more intraday and swing, because I can get both pictures, 30-minute, 15-minute, and 1 hour. I love those time frames to look for these type of zones. That's just how I am. 2, 3, 4, 5 minute, 1 minute is where I'm looking for entries. We're going to find some type of point of interest, right, in our rally. I always like to look for it in a rally, because especially if we are looking for a short sell or even a selling limit order, I want to know where and when price can hit this, so I'll be prepared for that move to the upside, because I already know my overall bias is going up. Now, I know I didn't do a daily markup, but usually daily time frame is where I want to get the overall balance or bias, where I would know, all right, we are in a daily high, a daily low. I want to kind of know if we're in a little pool, are we in a major low, so forth. So what I then do is look for interest in the rally. So here, if we look left, I can tell you right now, we do have a nice imbalanced area right here. So I'm considering this area pretty solid. As well as that, I do like this play right here with this beautiful point of interest zone level, which would be considered our supply level. So these are my areas that I'm looking for. Now, I usually like to get very detailed with it, so I usually go to the 15-minute time frame. So just considering that I'm already very, let's say, interested in these two areas, I want to see price basically take over these zones, mitigate these zones, and kind of hope market to hit up. But before we do that, now I want to see price hit this liquidation here before I actually look for the sell. Or let's just say you don't want to look for the sell, you're just looking for a selling opportunity to go up, like a limit order. We can do that as well. So let's go ahead and play this through. So I am still looking for market to grab out all of the, let's say, the buyers that's coming in, which will hit that buy stop, right? So I'm still looking on market to hit that and come out. So it looks like we got that move here. So what I want to then do is I start heading on a smaller scale, and the smaller scale would be like 15, 5 minute. We're actually going to go in a 5 minute. Now on that 5 minute, I want to see the change of character, right? So the change of character is where market was going once upon a time, and then it just switched the other way, which kind of gave you a broker structure. So we have a change of character here. So now since we got that change of character, when market actually decided to break to the downside, this is where we can start looking for these entries. For me personally, 1, 2, 3, 4, 5 minute is preferably where I like to enter. But before I look for my entries, I still want to look for the same exact setups, which I mentioned earlier, before I get in a trade. So let's say that I did miss out on this opportunity, and we're going to play this one fairly, which I did. This was my point of interest, which is really my fair value gap area, where market created this gap in between these three candles. This is kind of what I'm looking for to enter, and I want to see market hits here. So now, since this already had happened, the next level that I am considering as my point of interest would be this level right here. So we're going to wait to see if market could, because we did get a breakup structure here, which I love to see that, right? We got a breakup structure here, which basically gave me the confirmation that this is a valid supply area, even on a smaller scale. I want to have market come back in this area again before I look for the sell, right? So as you see, you notice how market peaked at this area here. So this is kind of where we can now go ahead and look for our entry for a sell. And what we're going to do is a simple short position, stop loss here. You can put your TP here if you want to, or you can even do, like, I would say at least 78, let's say 78% away out of that supply level. And then we can just look for that simple trade inside of here, and we can just sell it. And as you see, even though this is where I like to consider my TP area here. Now, this is what I call a nice little, we can consider this a nice little 2.39 or whatnot. However, I did caught this on the 5 minute, but now let's say that we wanted to go back, right, and catch the same play on the 1 minute. What we're going to do is go back in that same position, which is right here. I'm still looking on market to come back because I missed out, guys. Remember, we missed out on this opportunity. So we're still going to stay on the 5 minute, right? Still going to stay on the 5 minute. And the key to this, guys, is patience. Patience. I know a lot of us tend to like just separate ourselves from patience, but guys, patience is the #1 reason why a lot of traders fell in the market, because they try to force a trade because they don't have patience, and we don't want that. All right. So same exact concept here, right? We look for the previous lows if we can spot it, right? We see we have one here, and then potentially we see we have one forming now. So let's that one move a little bit too fast. So now we see we got the breaker structure here, as well as a potential breaker structure here. So what I'm looking for is a fair value gap again in between, or supply level, which is this one here. However, I see a fair value gap in between here, so I'm going to consider that. And we actually already hit that, which is this one right here. So let's see what the next candle does, and the next candle starts to head down. So now what we're going to do is take our short position. I'll just take it from here because this is my entry. Stop loss would be this tight. You can either put it above your fair value gap, or you can even go here. The nice thing about a 1 minute, guys, is you can find really aggressive entries, because now if we look, we are looking at a RR of a 3, right? Or one, not a 1-to-1, but a 1-to-3, 3.75. We can essentially take that. Or even if we wanted to get it in, which would technically be, I like to get in the close of the candle, which would be here. This is still a beautiful 5, right? We're looking at an RR of a 5%. So we can take that play like that, and guys, we can just ride this out. And as you see, we still came, depending on your spread, you probably would have got stopped out, right? But let's just say for the sake of it, we essentially actually didn't get stopped out, because if we did, it would have turned that color. But essentially we didn't get stopped out. However, just for the sake of it, guys, we're going to keep playing this trade. This never really essentially got stopped out. But depending on the spread, that's why I usually say, man, just go with Osprey FX. You guys won't have to really worry so much about that. But we're going to see how this one plays out on a 1 minute. Now, yes, on a 1 minute, you obviously want to get in and out, and that's the whole mentality of a scalper. But this is what happens. Sometimes we don't know when the market is in this type of rough consolidation. Now, yes, since we do like to, trade different time zones, it's best to catch it during London or New York opening, because you're going to catch a lot more volume, volatility is going to happen, and all that fun stuff. But essentially, guys, that's kind of how it works. It's just really kind of how it works, right? So this one did take some time, but guys, this whole entire trade ended up playing out very well. Now, since we got market to smash that, you guys can exit out that trade. So now what I like to do is head back on the 5 minute, and then I like to look for my, let's say you were looking at the market, this is where you can look for those buy limits, right? So those buy limits, you will basically long it. And I think earlier I said sell limit. I just realized I said sell limit, but buy limit, you can long it. Now, this is where it gets interesting. This is actually where I will usually go back on a higher scale, and I'm gonna explain why. So I already know my bias is up, right? I already established this on the daily. I mean, if we were to go in a daily time frame, I would know for sure this was my daily high. This might have been peaked on a daily time frame. This for sure would be peaked on a daily. Everything is telling me daily, or high. So for me, what I always like to do is, if you guys haven't watched a lot of my other videos on the Fibonacci play, definitely watch that. I'll link some in this video. You can check it out. Make sure you subscribe. I always like to draw out my Fib points from the swing low to the swing high, which is this here, because wherever I see these two basically Fib retracement lines, levels, this is where I like to put what I like to call a potential new high or potential new low. So me knowing and having that concept is basically saying simply, I want to see my potential new high hit here, which I want to see another liquidation pool or another liquidity area where I would love for the banks, smart money, to grab everybody out again and hopefully look for another setup going down and then riding a wave up. So, but before we get into that, let's just say if we were to put a sell limit order, I usually put my stop loss a little further out. I don't keep it too tight, just because as a limit order, I like to really read price, right? But if I'm doing a limit order, I don't have like a pip count, guys. I know a lot of people say I'll do 5 pips out, 10 pips out, 20 pips out. I just kind of see where market is at, right? Seeing I already had a lot of supply here, and then I had this imbalance here, I usually just put it in between here, and then I just ride this straight here, which is like I said, it could be a lot of pips for a lot of people, and this is why I have that risk position calculator, because that risk position calculator will tell you what lot size you should actually enter off of this depending on your account size, which I love a lot. Say you got a $100 account, you probably will not even be able to take this trade with a 0.01 if your leverage is a 100, which you can use the calculator. I probably might pop it up, show you guys here again, but that's the calculator, right? So all I'm doing is, if I'm reading the market now, I am just going back on like the 2 minute, 1 minute, and I'm just looking for structure to break, right? Change of character. I'm just looking for all that to happen. So we have this right here. This is my previous high. Now let me go ahead and remove my fibs because I already got my potential new high, potential new area of structure. We're just going to simply see what happens. So you see now we got that break of structure, right? So now since we got that break of structure, what I am looking for is another area of structure, which is in here, right? This is all the fair value gap. So seeing that we already have that, I can put an entry here and my stop loss can be literally, guys, just a couple pips under my fair value gap. And now you see the shift of this RR is now 7.24, right? So we can go ahead and play this one out. And as you guys see right away, immediately we hit those failed points, which created, like I said, once again, that potential new high. This is now what I like to call my buy side liquidity. We grabbed that out there. And now since we grabbed that, what could happen is, since I already know my field played in this area, we could get the other move to the downside. So that, guys, that being said, like I said, get this to 500 likes. If we can get this to 500 likes, you guys will be able to get the PDF. Make sure you are subscribed. Make sure you check out the broker Scalping FX. And also, if you want to get in tune with the Discord and get up to date with a lot of trading ideas, we post a lot of signals and just a lot of fire classes. We do weekly live classes. You guys can. Otherwise, I appreciate the love, support. See you guys in my next video. Peace.